Hey everyone, and welcome back to the show. So, in today's episode, we're actually going to talk about how to pick winning stocks. A lot of persons would be wondering, how do you really pick winning stocks? What do you look out for? What do you listen to? And what do you really observe? So, we're going to discuss all of that in today's video. So, how do you pick winning stocks? There is no way to pick winning stocks. Oh, listen to me. Now, hold on. So, when it comes down to investing in the stock market and actually picking stocks that do very well, based on my experience, I'm going to share with you a few tips and tricks that you can use in the stock market that would also be able to give you hundreds of percentage returns and get you closer to that $1 million stock portfolio. So, when it comes down to picking winning stocks, the first thing that you want to do is your research. Now, I know research is a very widely used topic and it's probably overly used, but hear me out. When it comes down to investing, the first thing you want to do is know exactly what you're buying. So you need to first figure out what is it that you're interested in, what is it that you like, and then you now decide to go into the market and you start from a broad scale. So you look at what's happening in the economy, you look at what's happening outside of the economy, you look at the interest rates, you look at the CPI, those data. And then after that, you look at the index fund. So you look at the S&P 500 and the Nasdaq index. And that tells you the direction that the funds are going in. So you look at it over a 5-day period, 6-month period, and year to date. That's how I personally invest. And then the next thing that you want to do is you want to look at the investor confidence. And when it comes down to investor confidence, the easiest way to check this is by looking at the fear and greed index. And CNN actually had created this. So what they do is that they take into consideration everything that's happening on the S&P 500. They take into consideration the amount of funds that flows through, the activities, and they derive the investor confidence. Now, the investor confidence usually has a number assigned to it, so it ranges from 0 to about 100, and it tells you whether the market is in extreme fear, neutral, greed, very greedy. So when you look at that investor confidence, it tells you how investors perceive the market. And then after that, you want to look at the moving averages. So you want to look at a 30-day and a 125 moving day average. And that will give you a direction as to how the stocks are performing. I personally, when I invest in the markets, I like to invest when the market is crazy and chaotic. So I tend to like investing more when the market is in fear and extreme fear. However, you can invest when the market is in a greed state or extreme greed, because this is where rallies usually occur and you see the stocks increasing by 2-3% over the previous day. 5 days it increases by 10, 15, 20% and so forth. So the investor confidence is really derived from the fear and greed index. So you really want to check that out. And the next thing that you want to do is you want to look at what's happening in the world, what's happening with you. And so when it comes down to investing, you really need to look at just how are persons perceiving certain values or certain companies or certain industries as opposed to another company, another industry. And if you look at the markets right now, McDonald's was one of the best stocks on the market. And since this year, they've really took a hit. They've really been battered. The fast food industry has somewhat slowed down, and now the fast casual industry has taken over, and persons haven't really been investing that much with McDonald's as they used to in the past. And then on top of that, there was a few persons that had gotten sick by a new menu item that they introduced about 2 months ago, and they scrapped it across the entire United States. And so these are factors that you want to look at when it comes on to investing and how it really affects the stock. So with these factors, it actually tells you the direction that the company is going and the direction that investors are seeking, are perceiving the company to actually head into. Now, another thing that you want to do, and this is probably one of the most important things to do, is strategize. So you want to pick a strategy that best reflects you. And when it comes down to strategies, especially if you're new to the market, you're new to investing, and when I say new, I mean you've been investing 2 years or less. That's really what I mean by new. So if you have been in the market for 2 years or less, then this is something that you want to pay attention to. So when it comes down to strategizing, the first thing that you want to do is you want to actually figure out what's the best strategy for you. What gives you the most peace and comfort, knowing that when you invest, you can sleep peacefully at night. And to get that winning strategy, the best advice would be speak with a financial advisor who can help you to map out that strategy. But there are some strategies that I will share with you. So there's a day trading strategy that a lot of persons use. It's one of the most speculative, highly volatile strategies out there. So the other strategy would be value investing. So that is really you purchasing stocks that you perceive to be of a much higher value than what the market currently has. And there's a swing trading strategy, and there's just a ride it out kind of strategy. So swing traders tend to just buy the stocks and just watch it as the market goes, and then the minute it starts to change direction, that's when they sell it. So that's really it. So we're gonna look more into value investing now. So with value investing, you really purchase the stocks below what it's worth, and then the aim is that the stocks will increase in value over time. And with all that's happening this year in particular, value investors would be smiling. And this is really because how the markets have been moving. There's been a lot of volatility in the markets due to interest rates, the CPI data being all over the place, and so this, and also the job reports, and so all of these really affected the markets and how investors perceive the markets, and so the confidence of the investors became very fearful, and so with fear, volatility increases, and that's when investors really make their money during periods of high volatility. And during periods of high volatility, you want to reduce the amount of speculation that you do within the markets. So when there's a bull market and stocks are running high and confidence is high in the markets, then you can do your speculations, and that's fine, and usually it will pay off more times than not. But during times of high uncertainty and high fear in the markets, then you'd want to put a damp on the speculations, and you'd want to more tune into your research and your planning, and you're speaking with your advisor and mapping out what you want to do. And so these are just a few of the tricks that you want to do when it comes on to investing. And another tip that you want to have within you is to plan. So you really want to plan exactly what you're doing. And planning really should be a reflection of you and just exactly what you want to accomplish through investing in the stock market. So if your goals is to have $1 million in the stock market, then you just get out a notebook, a notepad, a post-it note, and you write goals at the top of the page. You write $1 million stock portfolio and put it somewhere where you can see it. If your goals is to have $100,000 dividends paid out every year, then you write that on it. And so the reason why you want to have this plan is that you want to know exactly how you are going to go about investing in and getting these investments. And so once you have that plan, now you'll be able to have that budget. And now the budget would be able to tell you how you are going to go ahead and get to this goal that you have, and how you are going to allocate your funds so that you can invest within this stock market. So you're going to invest 10% of your income, 20% of your income, 30% of your income, or 40% or even more of your income. Now, that's really what the budget tells you. So it allows for you to see exactly how you're going to go about investing in the markets and how much you are going to go and put within the markets in investing. And when you create this plan and this budget, please stick with it. Like, if you do not stick with the budget and the planning, then it makes no sense. So by sticking with this and you do it every month, you will see your investment starting to flourish, and you will see that growth, and you will get that experience, and you will feel it developing within you. And so the last tip and trick that I want to share with you is about trusting your instincts. Now, there's a saying that goes that your gut feeling is always right, or your gut feeling is the best feeling. So when it comes on to investing, your gut feeling at this point in time, you don't know what your gut feeling is. So your gut feeling really is just that little hinge, or that little push, or that little voice in your head telling you, sell me, or buy me. So what it really is telling you whether you should sell or buy this stock. Now, when you're just starting, if you're new to the markets and that is investing 2 years or less, you won't know what your gut feeling is. And so you just be analyzing and looking at the data and trying to figure out when is the right time. And this is really your experience that is developing. And so as time goes by, you will start getting these little hinges and these little feelings, or you hear that little voice in your head telling you to buy or to sell, and you'll ignore it the first time. The second time, you'll ignore it again. The third time, maybe you ignore it. But by the fifth time, you would have trusted it at least once. So maybe the fourth or the fifth time you'd have trusted it. And out of 10 times, the first 10 times you get that feeling, you probably trust it just about 3 times out of the first 10 times. And so when you trust that instinct and that gut feeling, it's the best feeling that you'll have. You will see the returns flourish, and everything will just fall into place. Now, initially when you start to trust your gut feeling, you're probably about 60 or 70% right. And then as the experience develops, as your consistency within the market develops, so too does your instincts and your timing. And so what used to be 60% or 70% accurate will now go up to about 80%, and then 90%, and then 100%. Now, for me personally, when I follow my instincts, I'm always 100% satisfied with what's happening. Now, a lot of times during my developments, I would have gotten these nudges or these hinges, and I would have pushed it aside. And then when I do decide to act, I would have not felt very good or happy with the results. And that's because when I acted, it wasn't my instinct that was telling me to act. And so I would have been like, what is this that I'm feeling, and what's this that I'm telling me what to do? But as time went by and as my experiences grew, I knew when to trust my instincts, and I knew when my instincts were telling me or talking to me, and not just my head saying do this or do that, but it was really my gut feeling and my core saying come out of this right now or get in that stock right now. And so my gut instincts is always 100% accurate. If I am not satisfied with the results, it's because I didn't trust my instincts. And usually when I don't trust my instincts, it's a number of factors that would tell me why I didn't trust my instincts or why it was wrong. And a few of them will be not doing the proper research, not knowing what is happening, not listening to what's on the channels like Bloomberg and CNBC. And so as time goes by, I would start trusting these instincts more. I did more development, more research, more courses to understand and know what's happening. And then I'm able to pick up on the patterns of the market and be able to understand when confidence is high and when confidence is low, and also when to invest and when not to invest, when to buy and when to sell. And so all of these would tie together, and it made me the investor that I am today, and it allows me to have an amazing portfolio that I'm happy with, and I'm just on this journey, on this path of growing it to levels that once upon a time I only dreamed about, and I didn't really know if it was possible or real. But as I continue on this path, I'm getting much closer and closer to those goals. So thank you guys so much for tuning into this video. I just ask you to give us a thumbs up if you do like it, leave any comments that you might have down below, and subscribe so that you don't miss out on future episodes as soon as they are launched. And if there is anyone that you think might benefit from this information, then feel free to share it with them and have a discussion around it, listen to it, and just grow and understand and educate yourselves, and just soak up as much knowledge as you can, because the stock market is really a very wonderful and enjoyable journey. Alright, take care, love you guys, until next time, bye.